Welcome to MA1 class. Today I'm dealing with the chapter 5 of the syllabus, that is accounting for labor. Accounting for labor. As you know, labor is one of the major costs for any organization, more especially for the service organizations, service institutions. So this chapter looks at how workers are remunerated in an organization, and labor cost, of course, arises because the company needs to pay wages and salaries. Companies need to pay overtime and overtime premiums. Bonuses can also be paid. For some companies that also pay holiday pay, sick pay, and payroll taxes, all those adds up to the labor cost for the organization. In many countries, Zambia inclusive, labor is paid on what is called the payee system, pay as you earn. That simply means that the organization deducts the income taxes and other statutory deductions before money is paid to the workers. So what workers get at the end of the day is what is called the net pay, after all deductions are done from the gross pay. Now let's look at different ways or approaches in which workers are paid. Number one, workers can be paid based on a consistent or constant monthly or weekly pay. So how do we calculate the labor cost if workers are paid on a fixed monthly or weekly pay? So all you need to do to calculate the labor cost here, you say labor cost equals the remuneration per period multiplied by the number of periods multiplied by number of periods. So that's how labor cost will be worked out. It's the remuneration per period multiplied by the number of periods. Remuneration per period multiplied by the number of periods. So that's how we calculate labor cost. For example, if a worker is paid, say, 5,000 per month, the labor cost for 1 year will be that 5,000 per month multiplied by the number of months in that particular year. That will be the labor cost. The other approach to remunerating workers is where the organization uses an amount based on hours worked. This is called the hourly pay. So an amount based on the number of hours worked, hourly pay, and that of course may also include the overtime premium if workers work extra hours or work overtime. A good example we can pick, that's illustration number 1 there. 52 hours are worked in a week. Basic week is 40 hours. The basic rate of $10 per hour applies, and overtime is paid at the rate of at a time and 1/2. What this means, time and 1/2, means that for every overtime hour, the company pays $10 plus half of $10. So overtime, you get $10 plus half of $10. That means the half of a $10, which is the basic rate, is going to be our overtime premium in this case. Workers are paid a premium for working extra hours beyond the normal hours they're supposed to work per week. So in this particular question, we are told that in 1 week, workers are supposed to work 40 hours, but in this particular week, they worked 52 hours. So you will notice that there is about 12 hours worked as overtime. Those 12 hours will be paid a basic rate, but also the premium of half of the basic rate. So the question is, how much is the labor cost here. So labor cost will consist of two things. Number one, the basic pay, and the second one will be the overtime premium. So the basic pay applied on the total number of hours worked will be 52 hours were worked multiplied by the rate per hour, which is $10. That basic pay will be 10 multiplied by 52, that's $520. So that's a $520. Now we're going to add the premium for the overtime hours worked. So overtime hours worked were 12 hours. So we'll say overtime premium equals we have the number of hours worked 52 less the normal hours that's supposed to be worked per week, that's 40 hours. Of course that gives us a 12 hours. So 12 hours where the hours worked as overtime hours. So overtime hours, there we have 12 hours. So 12 hours overtime multiplied by the overtime premium, which is a 50% of course of the normal basic rate, because overtime is paid at the time. That's the basic rate of 10 plus half. So it will be 12 multiplied by 5, which is half of $10, and of course that will be about $60. So $60 will be the overtime premium that is paid. So plus the basic pay, which was $5,520, the total labor cost will be, total labor cost is going to be $580. So total labor cost, that's 580. So that's an amount based on hours worked. So you just get the number of hours worked multiplied by the basic rate. If there is overtime worked and overtime premium is paid for that overtime, you take the number of hours of overtime and multiply it by the overtime premium per hour. The third approach of remunerating workers is called piecework. Now here an amount paid to workers is based on the number of units produced. And in many circumstances this is accompanied by the minimum amount or the guaranteed minimum that is paid to workers. The guaranteed minimum obviously applies more especially in countries where there is a minimum wage rate regulation. So the company cannot pay less than the minimum wage, so they have to put the minimum wage as a guaranteed minimum. But where workers work and produce more units, they do much more work, they are paid more depending on the amount of work done or the number of units produced. So let's look at this illustration. We are told that the minimum pay per week is $250, and the piecework rate is $3 per unit. So if a person produces 100 units, how much will be the pay for that person? It will be 100 units produced multiplied by the piecework rate. The piecework rate of $3 per unit. So $3 per unit multiplied by 100, that will be 300. The $300 is above the minimum pay, so that worker will be paid $300. But in the case where the worker produces 80 units, the pay according to the piecework rate is 3 multiplied by 80 units, and that will give us $240. So $240 is lower than the minimum wage. So this particular worker will be paid the minimum pay, the guaranteed minimum pay. He will be paid the 250. The fact that the worker produced units that are equivalent to 240, but because the 240 is less than the minimum, the worker gets the minimum. Another approach to remuneration is based on productivity. Now, there are many different types of bonus schemes that can be given to workers based on their productivity and the time saved. So if workers have done more work within a shorter period of time, the company may wish to give bonus to such workers. So such a pay will be based on the workers' productivity. And here the situation is you just have to follow what the question will set out, the precise details and rules that the question will set out. Questions can come in different styles and different forms, but there will be precise rules that will be given in the particular question on how you calculate the pay for workers and the labor cost as well. Now let's look at the gross and the net earnings. As I said earlier, that many countries use the payee system when it comes to remunerating workers. So payee system means the company has to deduct the income taxes and other statutory deductions from a person's gross pay, and so what a person gets at the end of the day is what is called the net pay. The net pay is just the gross pay minus statutory deductions, including the income tax. So what is the gross pay? Gross pay is the total amount earned by the employee, and the net pay is the amount paid to the employee after the employer makes deductions for income tax and certain statutory amounts or deductions. So the total labor cost to the employer, the total labor cost to the employer includes the employee's gross pay plus any additional payroll taxes if that applies in a particular country, and perhaps the pension costs if that also applies, that the employer has to bear. Obviously here in Zambia the employer has to bear a certain percentage, a certain cost in relation to pension pay. That becomes the total labor cost to the employer. The employee's gross pay plus additional payroll taxes that the employer has to bear. The labor costs are classified as direct or indirect depending on what caused those costs. And in regard to the direct workers, the direct labor cost includes all hours worked multiplied by the hourly rate, if you are using the hourly rate, or if you are using the piecework method, all the units produced multiplied by the piecework rate. That will be called direct labor cost. Indirect labor cost include overtime premium that is paid to the direct workers, but we have other rules that govern overtime premium. If that overtime premium was demanded for by a client, then the overtime premium will be considered as a direct cost. Otherwise, overtime premium will be an indirect cost. Idle time that the company pays for is an indirect labor cost. The sick pay, holiday pay, and things like that will be considered as indirect labor cost, even if it's paid to the direct workers. Labor turnover. Labor turnover measures the rate at which employees leave the company, and obviously we're looking at the employees that are leaving the company and needs to be replaced. That's the labor turnover. What's the rate at which employees leave the company, employees that needs to be replaced? So that's what labor turnover measures. Generally, this rate should be kept low because there is a high cost of labor turnover. Cost of labor turnover includes things like the cost of recruiting new workers, The cost of training new workers. We know that if we employ new workers, they need time to gain the experience, so we need to train them. So the cost of training new workers, so it's better to keep the old workers at the company for a longer period, as long as you can. Labor efficiency is likely to be low because new workers will usually not work as quickly and they have less experience, of course. And obviously the levels of mistakes for the new workers will be quite high. So that's another cost of labor turnover. So if the company keeps on renewing workers, the company will always have that challenge of workers trying to get experience, trying to become more efficient than before. The quality and customer satisfaction might also be affected because new workers may not know how to handle customers and things like that. Work might have to be turned away because there isn't enough staff when workers leave the organization. So those are some of the labor turnover expenses or costs that the company actually has to incur if there is a high rate of labor turnover. This is the reason why companies must keep the rate of turnover as low as possible. But what are some of the things that the company can do to keep workers in the place for a longer period? The company needs to have good conditions of service, of course, pays that are satisfactory to the workers, and that of course will keep the workers in the company for a long period of time. Let's look at the possible reasons why people leave companies, why people leave organizations, possible reasons for labor turnover. Sometimes it could be due to illness. Somebody's ill, sick, they can't continue to work, so they leave. Employees want to move to get a variety of experience. Could be another reason why workers leave the organization. They want to gain a variety of experience. It could be due to dismissal. Poor wages and conditions of service is another reason why workers may leave. Too much stress and social hours if the company works unusual hours and social hours that do not allow workers to associate with others because they are working late. So that can also cause workers to leave the organization. Poor opportunities for promotion, oppressive kind of behavior, unpleasant management, horrible job, broken promises, all those things can cause people to leave the organization. So that's all about labor turnover. In my next video, I will deal with the calculations of the turnover ratio, labor turnover ratio, which of course we can even talk about now. We'll talk about the efficiency ratios in the next video, but the labor turnover ratio is simply the number of workers that are leaving the organization and need replacement over the average number of employees. That can also be summarized as the number of replacement staff over the average number of employees for a particular period. So in my next video, I will deal with labor efficiency ratios and other ratios that accompanies labor costing. Thank you so much for your time.